Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right, you heard him. My name is Mark Eitel, host of the Mr. Mortgage Show. And first, let me thank you for spending a little bit of your weekend with us. Dom and I are in the studio and looking forward to another show. So hopefully you are settled in with a cup of coffee or a cold beer or a shot of tequila, whatever gets your weekend started. So super excited that you're with us. So just throwing this out there, the Anytime Hotline. If you have questions, you can call or text us at 561-291-8569. That's 561-291-8569. Get your questions over to us, and we'll be happy to answer them during the show. Or you can visit the website, www.mr.mortgage. That's mr.mortgage, and you can submit your questions there. So as always, we kind of kick the show off, going over the news of the week, most specifically the financial and interest rate and real estate news. So as everybody knew it was coming, the long-awaited interest rate move happened this week. The Federal Reserve finally, what's that song? A little less talk, a little more action. He made that quarter point move. So interestingly enough, there was very little effect on the interest rate environment, only because this has been so widely anticipated. It's been baked into the cake, if you will, for a while. So we have officially started the increasing interest rate environment with the Federal Reserve. So we're going to watch and see what happens. And those of you who follow the mortgage market closely know that the Federal Reserve overnight rate does not dictate mortgage rates, although everything does have a tendency to trend together. So it's kind of like the tide coming in. The surface of the water might be moving at a different speed than a little bit deeper, but it's all moving in the same direction. So we're going to watch interest rates moving forward. And interestingly enough, there are 226 countries that have monetary policy with an overnight rate at 0 or less. And we are now the only ones venturing back into positive territory. So hopefully we're leading the way and we're not out there by ourselves on this one. I do believe inflation has caused this. I think the overall global economy still wants cheap or free money. But locally in the U.S., we're experiencing so much inflation that the only way to offset that at this point is the Fed to start moving rates. As we've all heard, we've kind of beaten this over the head. So we're gonna watch it and see. It doesn't have an immediate play on rates. And interestingly enough, I think what may have an effect is they indicated during the meeting that they intend on another 6 moves this year. So by the end of the year, they anticipate the overnight rate being close to 2%, which it's going to make the cost of money across the board more expensive. So hopefully that tamps down inflation as they intend it to. Inflation's darn near 8%, and their target for inflation in a healthy economy is 2%. So there's a lot of movement to be made on the inflation side of the scale, but hopefully this works and it's not a situation where we have too little too late or then it spins into overcorrecting. I don't know, kind of like driving a truck down a dirt road. My first experience driving on my own, I was 12 years old and my father put me behind the wheel of a old F100 with a 3-speed column shift on it. And he climbed in the bench seat right next to me. And as he did back then, popped open a Budweiser and said, "All right, boy, this is your turn to drive." So we took off. We lived out west of town, so we were on dirt roads, and we probably couldn't get away with any of that today. But anyway, going down that dirt road, I took a corner and shifted at the same time, and the rear end of the truck got a little loose. So we swerved, and I spun the wheel back the other way, just as, you would, and, trying to correct it. And I didn't know what the heck I was doing. And the truck spun back the other way, and, a series of kind of fishtails down the road Dad reached over and grabbed the wheel and steadied it, and then asked me to stop the truck. And I thought, oh my God, I'm in trouble. He's going to get mad at me. Luckily, he didn't spill his beer, or he probably would have been mad. But long story short, one of the life lessons I took away from that was what he shared with me next was sometimes overcorrecting is as dangerous as not correcting at all. And while I was kind of swerving down the road as a young boy in that pickup truck, that's kind of governed some of my decision making in life is don't overcorrect, don't react, kind of gather the data and respond. So hopefully that's what the Fed has done. But, interest rates, as we mention every week, have ticked up just a little bit. We are now over 4%. As I often mention, the Freddie Mac weekly report that is issued on Thursdays came out this week with an average 30-year fixed rate for all products in all metros at 4.16%. Costing almost a point. So that rate is being purchased down, if you will, with fees of almost a point. So we're in the fours. Luckily, a lot of the ladies have been practicing saying four with those duck-lipped selfies on Facebook and Instagram. So you do need the duck lips to spit four out. But that's where we are. And the good news, everyone, is it's still a wonderful, wonderful interest rate in the fours. I think there's only been 3 times historically that we've been at a rate this low for this long. So 4% is a wonderful interest rate long term. It's cheap money. It still makes a ton of sense to go out there. Actually, while I'm talking about this, I just want to throw out one thing. I had a super interesting conversation with someone, and it dawned on me that we only really get this nitpicky about interest rate when we talk about real estate purchases. And I was talking with a client who has a super cool car, and I just asked him, what interest rate do you have on that car payment or on the car loan? And he didn't know. He said, I don't know. I said, well, you know what your payment is? Of course he knows what his payment is. I said, and you're happy with the car and you're happy with that payment? His answer was yes. And I asked him then, what interest rate do you have on your credit card? He couldn't answer that either, but also happy with the credit card company. And my point in all that is oftentimes we evaluate the cost of something just as the payment. We're only considering the payment, and we offset that by either the value or the pleasure that that purchase gives us. In the case of a car or a truck, there might be utility involved in the truck. It might be a work vehicle, and you use it as a tool to make money. But you've done that math. That costs me $350 a month or $450 a month, and for the amount of pleasure or utility I get, I'm happy with that. Well, we're at that point where we need to concern ourselves less with the interest rate that we're buying a home with and look at the payment, right? So we're still talking about fully amortized 30-year fixed rate. So you're paying principal down with each monthly payment. So it still makes sense to own the home. You hear me preach it all the time. Even if property values never go up again, you're accumulating equity by paying down the note. So my point in all this is if you are paying rent and you can go out there and make a purchase with a comparable or even in some instances lower payment, why would you not make that purchase? So I'm working with a client right now. I'm not going to disclose any names, but he's making a purchase of a property for $325,000. He's using an FHA loan, so he's putting 3.5% down. His monthly payment, including everything, principal, interest, taxes, and insurance, is less than $2,400 a month. Now, we talk about that Zumper rent report often on this show. In West Palm Beach, and I use West Palm as the example metro because that's where we are broadcasting from. We're in the iHeart studios here in West Palm Beach. But the average rent in West Palm Beach is $2,800 a month. So for a 3-bedroom, 2-bath. So why, if you could buy for less than $2,800 a month, would you get hung up on a 4% interest rate instead of a 3% interest rate? So again, I throw that out there because when you're evaluating rent against your potential mortgage payment, look at the payment. In that example, this gentleman would actually save money each month over rent, and who cares if the interest rate is 3% or 4%? So I share all that only because buying real estate still makes sense. And we're going to get into some of that on the other side. I hear the sirens coming up behind me, so you know what that means. We're going to go into a break. But on the other side of this break, we're going to take some more questions. We're going to dig a little deeper on that particular topic. But hit us on the Anytime hotline at 561-291-8569 with your questions, or www.mr.mortgage. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, so we are back. So my point in all of that opening monologue, if you will, was don't get hung up on the interest rates. Look at the overall opportunity that's in front of you. You hear me say opportunity in the market all the time. So I'm not going to beat that over the head any longer. I do think that we have a tendency to, we're a headline society. So if we see rates go up, all of a sudden we think it's real estate makes sense, doesn't make sense anymore. And it couldn't be farther from the truth. We've talked about real estate as a wonderful hedge against inflation. Rents are going up, food is going up, travel is up, everything is up. If you had a 30-year fixed rate mortgage payment, your housing expense would not be going up. So just give all that some consideration. We're always happy to answer your questions, even if they're not, directly related to an immediate transaction and you just want to have a strategy session. Give us a shout. Again, that Anytime hotline is 561-291-8569. And when Dom and I are not in the studio, that number pushes to my office. So you can always get us at that number, 561-291-8569, or www.mr.mortgage. And the last thing I'm going to say about this whole anticipation of a housing market shift, and we've got that near-term memory of the crash, is we're in a very, very different market. We've experienced this appreciation cycle for different reasons. And I'm going to throw out one example and then I'm going to move on. Back when we had the housing bubble, we had one person buying multiple properties. So it was pure speculation. So when property values started to decline because money wasn't there for people to then buy those properties from that investor, if you will, and that wasn't a seasoned investor, it was an average Joe. He had multiple properties to unload. They went into foreclosure. We're not seeing that now. We're seeing people line up to buy their one and only primary residence. So there's still way more demand than there is sell side inventory. So for that reason alone, I think that we're in a different market. It feels the same. I get it. It's scary, but do not let the interest rates scare you away. So as promised, we're going to dive into some questions. I'm going to throw it over to Dom, my producer. I know he's got a question that came in during the break. What do we have, Dom?
All right. I have Christopher from the text line. Christopher said, my landlord just jacked my rent by almost $500. This doesn't seem legal. Is there anything I could do about it?
Hey, Christopher. Yeah, that's a tough situation to be in right now. And I'm hearing a lot of that. I get, one or two people a week that are thinking of buying because they're frustrated with what they've gone through with their landlord. And sadly, from a legal standpoint, I don't know. Let me rephrase that. I don't know sadly, because I do believe in a fair market economy. But legally, I do not believe there's anything you can do unless there was something specifically written in the lease that governed the rent increases. In commercial leases, there's often a predetermined rental increase, but in residential leases, rarely is that in there. But it's worth looking at your lease before I say no to that. I guess look at your lease to see if there was renewal acceleration built in, not acceleration, but renewal increases built in to your lease. But it's unlikely with a residential lease that it's in there. So sadly, you may not have any recourse. But again, another reason why buying property, if you can, would make sense, because you're not going to knock on your own door and raise the rent. And I always caution people to not look for government intervention to solve every problem. And I read an article this week that I found was super interesting and startling, but I get why this particular state senator was trying to pass this bill. So this comes out of California, and I know there's a lot of kooky stuff that happens in California, and a lot of the country looks west and laughs. But 51% of all residential real estate transactions in the third quarter of 2021, which was the data set that they reviewed, were purchases made by investors. Now, the national average is 19%. So because of that, some of the legislators in California said, hey, let's enact a bill that'll make it harder for investors to buy and flip properties. And right on the surface, I guess it makes sense. Then that would leave the inventory available for the families who are trying to buy a primary residence. And oftentimes rules and decisions are made with the best intentions, but there are other byproducts, if you will, that sometimes have a negative effect on a market. So this bill that they've proposed is a capital gains tax on any property sold within 7 years, any residential property. That includes you buying your one and only property. Now, they want to enact a 25% capital gains tax on any property sold within the first 3 years, and then it steps down from 25 to 20 to 15 to 10 to 5, and then after 7 years, there's no capital gains. So on the surface, yeah, that seems like it would make sense, but I doubt that's what's going to happen. What more than likely will happen is those investors are now going to have a 7-year game plan. And institutional investors are most likely the ones that have the horsepower to buy and hold for 7 years. So I believe in my gut, I don't think it's going to pass because I think cooler heads will prevail. And I also do believe this was a well-intentioned rule or proposition. However, if you think about it logically, if you allow or encourage, in this case, institutional money to come in and buy a large portion of the inventory with the intent to rent it for at least 7 years. Now, we all know what's happening with rents, especially in states that don't govern rent increases. You're more than likely going to create a generation of renters because that property can't re-enter the market for that 7-year period of time without suffering a capital gains. And we all know savvy business people, investors, especially institutional money, know how to find a way around the rules and the taxes. And I don't say that in a bad way. That's the smart money. They're in this to make money. So I just think on the surface, they might sound great. Let's discourage investors. But I think you're just encouraging investors to hold the property, taking less inventory off the market, which is going to cause more people only to have the option to rent. So while a $500 a month rental increase is super frustrating and feels criminal, I think we need to let the market shake itself out, because sometimes government intervention is not the answer. I guess let me go back to that story about me driving the truck and overcorrecting. That California proposal almost feels like an overcorrection to me that could have some wayward byproducts. So I'm sorry to hear that you're going through that. It may be what you need to encourage you to kind of take a look, that kick in the pants, if you will, to take a look at possibly trying to make a move of your own, because that's another reason why owning property makes sense. So give us a call. I'm happy to walk you through options as a first-time buyer if that is is truly your circumstance, and at least let you know what you could qualify for if you wanted to buy. And lastly, Chris, let me throw this out there. Sometimes we get hung up on waiting for that perfect house, and we miss the perfect opportunity. And the perfect opportunity might not be the big house with a pool. It might be, a 2-bedroom townhouse or a condo that you can, comfortably afford the rent or the mortgage payment on, rather, and avoid paying rent. Hold it for a couple years, sell it, cash out the capital gains in Florida, gains free after 2 years, up to $250,000 if it's your primary, and go buy the house that you really want, or hold it and rent it, because you know what the rental market's like now. So, it's frustrating. I'm seeing more and more people that are making the call to our office to find out about making that move, because they're fed up with the rental increases and got caught off guard with a big rent increase from their landlord. So, if you have questions, give us a shout. 561-291-8569 is the Anytime hotline, 561-291-8569. Again, that rings to my office during the week, so super happy to walk you through anything. But to answer your question, I don't know that there's a lot you can do if it's not written in your lease. So also, too, don't forget the website, www.mr.mortgage. That's www.mr.mortgage, never a .com, just mr.mortgage. We're going to take a quick break. On the other side of this, we'll dig into some more questions. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes. I'm happy to recommend Mark and his Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, Mark Eitel here, host of the Mr. Mortgage Show. And as you heard, 561-291-8569 is the Anytime hotline. Dom is standing by and manning that, and happy to answer happy to get your questions to me so I can answer. Actually, Dom probably could answer a lot of these questions. He's been with me long enough to know most of these answers, but he's manning the question line. We also are watching for the incoming emails to www.mr.mortgage. There's a contact us link there too, where you can shoot us your questions. So hopefully, Chris, that answers your question. I'm sure it's not the answer you wanted, but hang in there, my man. I know a lot of people are getting hit with rent increases, so you're not alone. I know that doesn't make it any easier, but when you're ready to have that conversation regarding taking that next step, give us a shout, and I'll find a real estate agent who's happy to work with you too. So anyway, speaking of Dom and questions, I know I see Dom behind the board with another one queued up. So what do we have, Dom?
Speaking of rent going up, my rent just went up too. Yeah. All right, Robin called with this one. We just moved down and paid cash for our house. How long do we have to wait to do a cash out refi? Okay,
that was Robin?
Yes, that was Robin.
Okay, great question, Robin. And then we're going to double back to Dom's rent in a minute. He slipped that in there on us. But so interestingly enough, Robin, that's a wonderful question. And a lot of people are doing what you did, right? They sold a large, more valuable property, cashed out a ton of equity, and relocated and paid cash. And there's a lot of regions in the country that are experiencing that type of buyer. Florida, Arizona, Texas, Tennessee, North Carolina, South Carolina are the primary relo markets with cash buyers. And if you, there's an acronym for that, Fat Cat, right? Florida's F, Arizona's A. So the Fat Cat states a lot, and I don't mean that to be derogatory to somebody who has the ability to pay cash, but those states seem to attract the cash buyers. So to answer your question, here's something that's super cool. It's fairly new loan product that was designed specifically to allow you, the cash buyer, to capitalize on the power of cash in this market, yet still access that equity and remove the cash back out of the property without, did you hear me? Drum roll. Without having to pay the additional interest rate of a cash out refinance. So oftentimes, because there's a little higher risk associated with a cash out refinance, and it's not me saying this, it's historical data, shows that once somebody pulls a big sum of cash out of the property, it's usually a sign that there may be future stress in that person's financial situation, if you will. So because of that, cash out refis typically have a slightly higher interest rate. This product is called delayed financing. And I know that was a delayed answer because I always have to set it up with a story, but you do not have to wait at all. There's no waiting period required for you to, as a matter of fact, you need to do it within the first 6 months to get the delayed financing option. And basically all that means is you can go through the loan process just as if it was a purchase mortgage and pull the money back out with the same rate in the same term as a purchase mortgage, which, just as I mentioned, is always a slightly lower interest rate, without paying the premium for being treated as a cash out refinance. And you can take one big lump sum check. It's not like the rec loan where we're paying off other debt. If you bought a $500,000 property and you want to pull $400,000 of it back out because you want to put it back in the market, or you want to buy more property, or there's other investment opportunities that you want to capitalize on, the loan product is called delayed financing. It's actually called delayed purchase financing. And there is no waiting period after you purchase your property to start the process for delayed financing. You can actually have the process in work while you're making the cash purchase, so it can happen very quickly. And lastly, I just want to remind you that you have a 6-month window after you close to take advantage of the delayed financing cash out strategy. So hopefully that answered your question. And as Dom mentioned, even his rent's going up, Chris. So everybody is suffering in that particular environment. And you hear me mention that Zumper report all the time. And, 50, well, I'm doing this from memory. I don't have it in front of me. I want to say 51 or 59% of the landlords surveyed anticipate increasing rent again at this next renewal period. So, and it may be a product of their hands were tied for so long with all of the COVID relief that they're just playing catch up. So I don't know what the I guess what I'm saying is it might not be just, the evil fat cat landlord that's trying to push you out of the property. There may be some other circumstances surrounding it, but at very least, it gives you an opportunity to look at making a move, maybe to a better place, to a cheaper place, but certainly possibly even making that move to becoming a homeowner. So back to Robin. Yeah, no waiting period. Delayed purchase financing allows you to pull that cash back out without paying the premium for a refinance. So back to more questions. I hope that answered your question, Robin. If you need more details or you have questions regarding that, give me a shout, 561-291-8569, and we can answer that in more detail. So, hey, Dom, do we have anything else that came in?
We do. We have Jimmy that emailed us. Jimmy asks, can I buy an investment property if I don't already own my house?
Hey, Jimmy, that's an interesting question. It's a great question. The answer is yes. You can absolutely buy an investment property first. I would love to have a discussion with you and find out why you want to do it that way, but you certainly can. There's no stipulation on becoming an investor that requires you to have first either owned now a primary residence or in the past. So super good question. We're doing a lot of investor purchases right now with that DSCR loan that you hear me talk about all the time. And the DSCR loan stands for debt service coverage ratio. So we have a term in the industry that we use called penciling. If the property pencils, which means does it cash flow? Look at the monthly expenses, look at the mortgage payment. Does the rent cover it? Is it a push or even positive cash? Then it pencils. Actually, with the DSCR loan, you could have a negative cash flow position on a property and still qualify for that particular loan as an investor. So yes, to answer your question, you can definitely buy an investment property before you have purchased your primary residence. Now, my question to you, sir, is why do you want to do that? Is it because you haven't found the perfect home yet? Is it because you subscribe to some financial strategy that believes owning investment property is more savvy than purchasing a primary residence? I'd love to have that discussion. I don't think there's a right or wrong answer. I think there are a lot of reasons that it makes sense on both sides of that equation, but I would hate to be paying rent if I could be paying a mortgage on a property I own. But also, too, I know sometimes just opportunity pops up and you can't pass it up. You may be out there looking for properties and stumble upon a great rental opportunity. I saw one the other day. It was an 8-plex. There were 2 4-plex properties on buildings on the same property, and those type of opportunities don't come up very often. Where someone's selling, in the industry they call it multiple doors, right? So you're buying one building, but you're collecting 4 rents. In the case of 4-plex, or in this instance, 2 4-plexes making up one 8-unit complex. So as a matter of fact, now that I think about it, that particular buyer, oh no, he does own his property. He just owns it free and clear. Just threw me there for a minute back down memory lane. But yeah, so they stumbled upon an opportunity that's not readily available. So to answer your question, you can certainly buy a rental property before you have owned your primary residence. But yeah, I'd love to dig deeper with you on that. Again, the DSCR loan is a great strategy for investors and for first-time investors. That's a product that in the past required that you had some seasoning as a landlord, some experience, if you will. And now that's open to all investors. So you can buy an investment property if you find one out there. If there's a great deal, certainly makes sense to jump on it, as I mentioned, with that 8-unit property that popped on the market. So you hear that rolling up behind me, the sirens and this cool song. Hey, that offer for the free Starbucks card for guessing the song, well, somebody won it. I'm going to share with you on the other side of this break. But 561-291-8569 is the Anytime hotline, or www.mr.mortgage. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel, host of the Mr. Mortgage Show, and you can reach us at 561-291-8569 with your questions or comments. Dom is manning the hotline. And as I mentioned, so a few shows back, that's one of my favorite bands that were playing leading into the break. And I threw it out there. If someone can guess the name of that band, I'd buy him a Starbucks card. So Lance won the name of the band contest. So that's Texas Hippie Coalition, and the name of that song is Blue Lights. So I've been dying to throw that out there, but finally somebody guessed the name of that band. So we'll change up the band sometimes in the future and throw out another gift card. But in the meantime, I really like those crazy guys. So yeah, and nothing like you would anticipate them looking like with a name like Texas Hippie Coalition. They should be Texas Biker Coalition, but a ornery bunch of guys. Anyway. Not to get sidetracked with that, because anybody who knows me I geek out on mortgages, music, motorcycles, and old cars, so I can get sidetracked on any of those topics. But speaking of mortgages, that's why we're here. We're here at the Mr. Mortgage Show. Again, my name is Mark Eitel. You can reach me at 561-291-8569 with your questions, either via the phone or the text. Or as always, hit the website, www.mr.mortgage. That's mr.mortgage. No.com. So speaking of questions and mortgages and geeking out on things, I'm going to throw it back to Dom. I know he's got another question for us.
All right. We have Javier sent in a text. He's asking, can you explain how the bank statement loan works? I don't understand how to figure what the income will be.
Hey, Javi, that's a great, or Javi, I'm assuming I can call you Javi. Javier, pardon me. That is a great question. So it's going to be different depending on, the calculation is going to be different depending on what field of work you're in. And I'm not going to dive deep into that answer because it's so specific to each individual applicant, if you will. I'm going to encourage you to call 561-291-8569 during the week, and let's set up an opportunity to talk. I'm happy to talk you through it myself, but just to give you an overview how it works. So we take your monthly deposit averages, and depending on the program, it's going to be either 6, 12, or 24 months worth of bank statements, and we're going to look at the average deposits and apply a multiplier to those deposits to determine what your income is. So I'm just going to share one thing to consider. So the reason it's different for everybody, imagine you're a consultant, Javier, and you work from home, and the work product that you produce is mainly your intellect, right? You're creating financial reports, or you're doing research, or you're producing data that your expenses in the production of that work product are your time and your knowledge. So you're not going to have a lot of hard costs, if you will, against producing that saleable work product. Now, if you're a contractor and you're buying materials and you've got to amass all these materials and take them to the job site and assemble them into a work product that's for sale, obviously a big portion of the monies that you're generating each month are expenses against your income generating work product. So that's why it's a little bit different. Here's another scenario. If you're an installer, for example, we have a cabinet installer that we're working with, and his name is Ted. So Ted has a contract with Home Depot and Lowe's, and Ted is the guy who shows up and installs the cabinets. Now, on the surface, it would look like Ted has a lot of expenses against his work product, but he doesn't. He provides the labor necessary to install the cabinets. So in his instance, he gets to use a larger percentage of his gross monthly deposits as income versus the other gentleman who I mentioned, or the other example, I don't know, maybe it's a lady, somebody that I made up, who's a contractor who's buying a lot of material. And then, Javier, I'm not sure what your field of expertise is, but if you're the consultant in that example, you're going to be able to use the highest amount of your deposits as income. So it's a little bit complicated and a little bit too specific to answer the question on the air. I encourage a conversation, and I'm happy to walk you through it. I've got an amazing team specifically built around this type of loan product, so we're happy to help you. But basically, we're looking at your bank statements and the deposits associated with those bank statements as an alternative income verification process versus, pay stubs and W-2s for a traditional employee. So I hope that answers the question. I definitely need a lot more information about what you do and what your expenses are against what you do to adequately answer the question specifically to you. But hopefully that gives you a general idea. And it's a really cool loan program because it opens up an opportunity for a lot of people who normally wouldn't have that opportunity because they write a lot of expenses off against their taxes and they don't show enough income to qualify for, but they may make the money. They're just, they have great bookkeepers, great accountants. So that's what that loan program is specifically designed for. So hope that answers your question or at least gets you started so you can give us a shout or shoot us an email and we'll be happy to dig in deeper with that. So, hey, Dom, do we have any other questions?
We do. Stephanie did not want to be on the air, but asked, can I use my crypto account as assets to qualify, or do I have to convert them to dollars for them to count?
Stephanie, I have to ask you, did you not want to be on the air because of all that crypto and you don't want the IRS to know about it? No, I'm just kidding. But great question. So there's a new loan program available that we just started offering in the last, I would say, 6 or 8 months at the Mr. Mortgage team. I'm super excited about this program, and I'm going to tell you why. In the past, the conventional lending, Fannie Mae and Freddie Mac, did not recognize crypto as a dollar-for-dollar asset because of the volatility, because it was unknown, it's unproven, it's unestablished. What is this mysterious electronic currency? So in order to get crypto treated as an asset in the past, just as you referred to, you would have to move it into cash. Well, anybody who trades crypto or invests in crypto knows there can be some serious gas fees moving out of a coin into even a Tether coin. They weren't accepting that at one point. So you would have to move it into cash and then move it back into crypto. And you just paid fees on the way out and fees on the way in just to have that asset used to qualify you for the loan. So great question. Now I'm going to share this loan product. I'm in the middle of a loan right now. So I'm going to share some details. Again, not going to disclose who this is, but they're buying. All they do is trade crypto. They've never had a real job. And listen, I'm not saying trading crypto is not a real job. I'm just saying they've never been employed by anyone other than themselves trading crypto. They've amassed a ton of it. So they're going to put, in this instance, 25% down, but they're going to cash out 25% of the purchase price into dollars to make the down payment. But then The rest is staying in crypto, and we're using it not only as the asset required for reserves, which I'm guessing is what you're referring to, but I get to use an asset depletion calculation against the crypto account. So they never have to move it into dollars. We're taking the crypto balance, and I'm only allowed to use a percentage of it because we have to anticipate capital gains, and there is a certain amount of volatility that they want to offset from the lender standpoint. But we're taking a percentage of the portfolio and dividing it by a certain number of months to determine a monthly income. So in this instance, this young couple who's, arguably never been employed, trades crypto and does it masterfully. They've created a lot of wealth doing it. We're able to use that as not only the cash asset to qualify, or the cash to put down, because they're gonna cash it out or transfer it into cash rather. But we're also allowed to use it for the cash reserve requirement, and most importantly, we're using the asset depletion model to create a monthly income surrounded by it. Best part, they don't have to move any of it. They don't have to start taking distributions for any of this to count. We're simply using the crypto as not only the asset to qualify, but also using a depletion model to assign a monthly income against it. So super cool to see what's happening in the world of crypto. And on the other side of this break, I might throw something out as this continues to evolve in this market, this crypto space. But anyway, you hear the sirens. We're rolling into this break. 561-291-8569. 291-8569 is the question hotline, the anytime hotline, or www.mr.mortgage. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
My wife and I own a small business, and the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage, but not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, I am Mark Eitel, host of the Mr. Mortgage Show, and we are back. Again, 561-291-8569 is the anytime hotline. Questions or comments can always be sent to that number. Also, too, visit us online, www.mr.mortgage. That's mr.mortgage. So I guess you could tell by the excitement in my voice that I geek out over where cryptocurrency is going as a legitimate asset in our economy. So super excited to see that loan product because it's new, crypto's new, and this is becoming a legitimate and significant asset in a lot of people's portfolios who in the past we had to discount. So just excited to share that one with you. So as that loan product develops, I'll share more. Hopefully that answers your question. I think that was Stephanie who shot that question in. But Yeah, I'd love to talk to you more about it because I know a lot of banks don't have that program yet, and we're super excited to be one of the first companies offering it. So also, too, in that crypto space, there's a secondary mortgage market where ownership of mortgages are transferred between investment entities. And the first push of mortgages on the blockchain happened this last week. So they're developing that back channel of or asset transfer, rather, in the mortgage space. And as that continues to evolve, I think it's going to pave the way to one day where you're going to be able to apply for, qualify for, and make mortgage payments with crypto. But not there yet, but we're certainly marching in that direction. So I did see one question pop in on the text line that I'm going to address real quick. I don't want to spend a lot of time on it, but Dan shot this question in regarding home inspections. And there's a strategy some people are employing to buy a home warranty and waive the home inspection. And I just wanted to share with you, you hear me talk all the time about the necessity of a great real estate agent in the process, or at least the benefit of one. And the Mr. Mortgage team just expanded into the state of Virginia, so we're super excited about that. And part of that process had me talking with new real estate agent, title company, appraisers, just a basic network of referral partners in Virginia. And we're amassing a rock star team there, just like we have here. And in conversation, one thing came up that was pretty interesting and speaks right to this question. So there were some agents that were using that as a strategy: waive inspections, buy a home warranty. Well, the home warranty companies caught on, from what I'm being told, and the home warranty company reserves the right to determine whether deficiency was pre-existing. And without a home inspection, there's no way for them to know whether that AC unit has worked in the last 10 years. So the home warranty company started delaying claims, from what I understand, up to 90 days. So they weren't accepting claims for the first 90 days on uninspected properties. And now, from what I understand, claims are being denied altogether. So while that seems like a workaround and may be logical, the home warranty companies aren't dummies. So they're catching on to what's going on out there. So I would caution you against it and direct you to a real estate agent that can help you make offers on properties without having to waive these critical contingencies. You heard Juan come on a few weeks back and explain his process. So I'm going to use that example to encourage you to just create the best team around you to look out for your interests. I know it's frustrating and you're wanting to waive the inspection contingency to get that offer accepted. Makes sense. We're seeing people do it, but you're also exposing yourself to some unnecessary risk. So to answer your question, I'd caution against it. I would definitely encourage you to have a very detailed conversation with the warranty company before you ever enacted that strategy, just to make sure you don't get caught with your pants down on the other side of something that could cost you lots and lots of money. So hopefully you found that informative. Yep, you heard it right. Mr. Mortgage is now in Virginia, and we're going to continue to expand, and we'll keep you up to date. Oh, and lastly, I want to share, too, if you want to keep up with the shenanigans that go on in our world during the week, check us out on Facebook. We have a pretty good Facebook page. Just search in Facebook www.mr.mortgage, and you'll find us. Again, www.mr.mortgage. You can hit us on the web, or 561-291-8569. Thanks.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages, right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.